Let's pick up on the markets now, and investors looking for much needed direction today after local stocks closed in the green yesterday, led by gains in shares of Naspers. Meanwhile, the rand strengthening against the US dollar. Let's speak now to independent markets analyst Jimmy Moyaha, joining us for a quick analysis of how the JSE is performing in early trade. Jimmy, good morning to you. Your quick sense of how the markets are faring this morning. Has trade responded to that jobs bloodbath at all?
Morning, Tony. Morning to the viewers. Well, I think in early trade, we're seeing that the market has opened positively, and this is largely off the back of tracking overnight sentiment and overnight performance from the US and into early Asia session trading. The US overnight was up almost more than 1% in most cases. The S&P as well as the Nasdaq up more than 1%. We saw that in Asian trade, the Nikkei was up more than 2%, with the Australian ASX up more than 1% as well. So we did sort of anticipate that the positivity would hopefully continue into our open, and our open was up. We opened about 1/5% stronger. At the moment, we've got financials sort of flat. We've got resources up about 1/10%. The top 40 is up about 10% as well. So hopefully we have a good day. We did see that last week wasn't exactly the best week for our local bourse. We did have a red week. And on the currency side of it, we are seeing that there's some slight weakness in early trade on the rand against all major currencies. Against the dollar, it's weakened about 1/5%. The same against the pound as well. And against the euro, about 1/10%. So not looking good from a currency side of things, but of course there are some announcements coming out later today. We're expecting the Fed Chair Jerome Powell to speak this afternoon around 3:30, along with the ECB President Christine Lagarde around 3:30 as well. So we might be seeing that markets are eagerly awaiting to see what announcements are coming around inflationary conversations, recessionary conversations. Obviously, those are still very much topics that are in focus at this stage, and we want to see what the directional sentiment is from the Fed as well as from the ECB side of it.
Let's talk commodities. Oil prices edging higher today after industry data showed a larger than expected drawdown of US inventories, signaling that robust demand from the world's biggest oil consumer. Make sense of those developments for us, please.
Well, the numbers came in, as you rightly mentioned, a lot better than what was expected. We do have crude oil inventory numbers coming out today. But if you look at the previous print, so we're not taking into account the 22nd of June's inventory numbers, but the 14th of June as well as the 1st of June, those were significant misses. And so one wonders whether or not the print that came out on the 22nd was just an adjustment based on that. Because if you look at the oil prices, there's still very much a very clear consensus that rate hikes are still in focus, and the fear of rate hikes is still a growing concern that markets are contending with at this stage. And as a result of that, I mean, oil prices not wanting to move too much. Yes, we've seen them come back to that support level around the $70 a barrel mark, and we know critically that that's not where some other oil producers like the OPEC plus regions want to see the oil price. And to that effect, we know that supply cuts that were announced by Saudi Arabia now kick in effective from July. So it'll be interesting to see how the oil price then reacts to that, because we are still expecting that alongside the interest rate conversation, and what we might hear out of the US Fed, the Chinese demand is still recovering at a slower than expected pace. So I wouldn't necessarily say that the demand at the moment that we're seeing now is a guarantee that oil prices are going to rise on the back of that. I think a couple of other factors are in play where regions or blocks like the OPEC bloc are looking to maintain the oil price at a certain level and are doing everything to control that, as opposed to relying on the demand side of things to do all of the work.
Let's talk company news. Exxaro says it expects to report lower production and sales in the first half of 2023. This as logistical challenges, high inflation and low coal prices affect its coal business. Talk us through that update, and on the back of what appears to be extreme frustration from the leadership at Exxaro, saying that the Transnet entity has got to meet the industry halfway.
Absolutely. This is something that is not isolated to Exxaro. It's something that Thungela has expressed in the past before. We know that the coal industry has had to incur north of 500 million rands worth of additional transport costs for having to use road transport. And now we know that Transnet has no end in sight. We know that in the last probably in the last 2 years or so, you and I have spoken on a number of occasions to say Transnet has declared force majeure more than 6 times, and they've assured companies like Exxaro that no, they're getting things under control, they're trying their best to fix the situation, but at the end of the day, there is no movement in terms of exports. There's an inability for guys like Exxaro and Thungela to get their exports to ports effectively, and this is a Transnet fault. This is not a fault of the companies not being able to produce. And to that extent, I mean, if we have to look at the production side of it, Exxaro said that they're expecting that production levels will come down by about 3.4% as well for this particular year period that they're reporting on. We're expecting those numbers out in August. But the overriding problem alongside other factors around high inflation, low coal prices, is that Transnet is not doing their part. And this is affecting mainly the coal side of it. We've seen that the iron side of the business has been able to start maneuver within the operational capabilities of Transnet. But the clear conversation here is our mining sector, whether you're looking at manganese, chrome, coal, iron ore, the main concern here is if Transnet is not assisting the businesses are incurring additional costs. And Transnet is not looking to balance out their inefficiencies with saying, let's get help from some other rail providers, some other private sector providers, or whatever it is. It looks as though the frustration from Exxaro is very warranted at this stage.
Let's conclude with the Federal Court of Australia, which has granted the administrators of Murray and Roberts Holding Company in Australia, that's MRPL, an extension to convene a second creditors meeting by the end of August. What's going on there?
So effectively, MRPL has asked to revise its deed of company agreement proposal document, and this is off the back of what happened with MRPL and Plough having been placed into administrative, or placed under administration rather, which is similar to business rescue, and that took place, and we saw that following that, RUC was also included. So the Plough business is now gone off to rebuild that we're interested in that business originally. That's been finalized, or that's being wrapped up in that respect. And now what MRPL is looking to do is basically come out of administration, but also then bring back RUC as a business into the MRPL stable and continue to operate that way. So RUC business was never really the problem business there. It was the fact that the cloud business had such a big problem that MRPL was and they were to sell that business anyway. Unfortunately, they're not going to be able to realize much from the sale because of the position that Plough went through with the rebuild side of it. But MRPL has now asked for this extension on this proposal in an effort to come out of administration and then also bring back RUC into the fold of its group structure.
Jimmy Moyaha, thank you very much for that markets update. Let me apologize to the viewers there. The last two responses from Jimmy interrupted by the connection there, which is a bit patchy at this stage. But nonetheless, thank you from Jimmy Moyaha for a bulk of that markets update.